Great European story with yourself. We're going to get another reading on Germany today, the ZEW. So this is about confidence and expectations. They plunged to negative 21.1. How ominous are the signs for European growth in the world perspective?
Well, Europe has issues within itself, and it has issues outside of itself. And within itself, it's dealing with all these kind of localized issues about leadership, not only in the European Union scale, but also within individual countries. And it also has the Brexit issue to deal with as well. But also globally, Germany is exposed, and a lot of European countries are exposed to obviously global trade, and particularly to China. And so the impact on the likes of the German economy and confidence in the German economy flowing from those kind of global trends is also quite strong. And so from that point of view, I think they are facing quite a significant problem right now.
Tim, we saw really bunds and European bond yields lead the sort of drop in yields yesterday. In fact, bunds had their biggest rally in 4 weeks. And then you've got people, for example, at Crédit Agricole saying buy the dip, and the backup in rates that we've had recently is just presenting itself as an opportunity. Is there a lower bound to the bund yield for you?
No, I think yields European-wise are certainly going to remain heavy in the context of the things we've just discussed. Policymakers are now reacting, and we saw that the ECB is probably going to be making a shift in its policy, not only before the end of the Draghi term, but probably following on from Draghi's replacement with Christine Lagarde. The likelihood is that the drift of policy, monetary policy, is going to become more dovish. I think that is going to anchor yields at relatively heavy levels.
Nera and I caught up with the chief economist over at UBS yesterday. He said the assumption that the ECB doesn't consider renewed ECB bond buying as a done deal. They do expect a shift in rates in July, and later in the year another 10 basis point cut in September and December. I mean, those are quite dramatic statements. Where do you see the ECB going? Are they going to be bounced into action by the Fed, or how much action do they need to take independently?
Well, I suppose I suspect they throw the cart horse at it, and they operate on all fronts.
What does a cart horse look like? What does a cart horse look like?
Well, every policy possibility that they will look at and re-examine the ones that they've done before in terms of bond purchases and in terms of policy rates. So I suspect that they are looking at it, and they have to look at it very exclusively from a European standpoint. Clearly there'll be pressure emanating from the United States if the Fed cuts rates, but I think the ECB probably has to get ahead of that and move on its own volition in the context of continually underperforming inflation and relatively mediocre growth.